Good afternoon, everyone, and welcome to Stock Market Today. My name is Ken Shreve, joined by our news editor, Ed Carson. And on today's show, we're going to take a look at a big up day for the NASDAQ, a pretty decent gain for the S&P 500, and discuss really what it means in the grand scheme of things. We are in a market correction, and, what kind of how are we going to look at this big up day? So we'll provide some color on that. But before that, Ed has found three stocks to watch for today. I'll throw it over to you, Ed.
Yeah, Ken, there are three stocks we want to look at: Medpace, United Rentals, and Fluor, all showing pretty positive action today.
Okay, still seeing some pretty good action in individual stocks out there. We are in a market correction. We are looking at a market that was quite oversold headed into Thursday, but we did get a pretty nice rally in the NASDAQ composite, seeing the NASDAQ ending with a gain of 2.6%, Ed. But when you kind of look below the surface, it just kind of a similar narrative played out here, where some of the best gainers in the index really weren't offering much in terms of strong technicals.
And that's not that surprising. I mean, like, beaten down stocks tend to be the big winners when you get that first rally a bit, sort of that kind of situation. So it's hard to make too much of it. It's also the best days in market history come on in bad markets. I mean, this is not a horrific bear market. Well, it has been a pretty bad bear market, but this little stretch has been sort of a correction that we fell into. We're now in a market correction, so we're looking for several days of strength to reassert itself. Right now, we just have one day. You can have one good day. We need to see a number of good days. We need to see the major indexes get above key levels before you get really, really excited about this market. And even then, we might want to be a little tempered given the history in recent months.
And just looking at the NASDAQ here, you can see the first first day of a rally attempt here, but still stuck below some key moving averages, and then that 200-day line just under the 12,000 level. So we talk a lot about overhead supply. I mean, it was a pretty sharp drop for the NASDAQ below that 50-day moving average. So could take a while to get back up. But anyway, hey, big gain for the NASDAQ today. We'll take it. Let's move over to the S&P 500, which also showed a pretty nice percentage gain, not quite as much as the NASDAQ. S&P 500 up close to 2%, 1.75%, but kind of a similar situation here, Ed.
Yeah, still below the major indexes. So nice to see the bounce, but it's one step. It's one step, and we need to see more.
All right, let's take a look at the Dow Jones Industrial Average. That lagged. We've been seeing pretty good leadership among blue chip, large cap companies, and the Dow is still making a pretty good stand at its 50-day moving average here. It lagged a little bit, like I said, with a gain of just over 1%. And IWM, Ed, small caps had a pretty good day as well. We'll take a look at the iShares Russell 2000 ETF. That performed mostly in line with the NASDAQ, up 2.6%. But again, hard to get excited about one day of strength. I mean, obviously, it could have been some short covering today that powered some of these moves. It was interesting in pre-market trading. You and I were talking, and futures were higher, but then this jobless claims data came out, and the index has really strengthened quite a bit. What was in the jobless claims data that the market liked so much?
Well, again, the market decided to take it very positively. Let's be clear. You didn't necessarily need to, but the jobless claims rose a little bit more than expected on the initial jobless claims. And then continuing claims, those have been trending higher, and that rose solidly again to the highest level since February. So when people get laid off, they're staying laid off a little longer, suggesting a little more weakness in the job market. But yeah, we got a good pop today. There was a nice pop. There was good news on Apple. Tesla rallied quite a bit. So as you said, a lot of beaten down stocks getting a bounce.
Okay, well, we'll see what tomorrow brings. Day one of a rally attempt for the market today, a pretty good one. I didn't get a final read on volume, but we're kind of in a low volume period of time for the market. So I think we were pretty close to yesterday's levels. All right, let's turn to some individual. We want to take a look at some ETFs here. That this RSP, the equal weight S&P 500 ETF, RSP.
Yeah, and it just sort of takes out the weight of, Apple and Tesla and these other names that a lot of them have been hard hit. Today they did pretty well, but so this one's come up toward the 50-day line again. I mean, you don't want to slice too hard. If you have to really squint to find strength and find that, you don't want to do it too much, but it does show that there is some underlying strength beyond the tech titans.
And then semiconductor stocks, a big reason behind the Nasdaq's outperformance today. So the VanEck semiconductor ETF, but this really looks like a lot of large cap technology charts out there, kind of stuck below moving averages, still on a downtrend. But we did get a nice rally for chip stocks today.
Yeah, and we just need to see more for this and for all the other major indexes.
All right, bond yields have kind of moved to the back burner. There was a time where it just seemed like every day they were moving markets, but we did, we have seen a nice rally in that 10-year Treasury yield, but bond yields pretty quiet today, even after that jobless claims data came out.
Yeah, so it wasn't a huge shift. Didn't really see the Fed futures change that much, but at least it didn't move higher. I think that was starting to worry the markets a little bit with that big relentless rise.
Okay, and finally, XLI. This is the kind of a blue chip ETF, industrial select sector spider ETF. This has a pretty good technical picture right along with the Dow Jones.
Yeah, and the thing is, it lagged the market just like the Dow, but that's because it wasn't beaten down. So these names they hadn't fallen 20% this month, 40%. So it was a lag, but not really in that sense. You'd much rather be the XLI than say the SMH. Let's put it that way. I mean, in terms of this last several weeks.
Yeah, no doubt. All right, well, let's take a look at some individual stocks now. First, we'll start with Leaderboard Stock, a contract research organization. A company is called Medpace, MEDP. It was one of the better performing leaders today, and I see you drop in a nice little trend line here, Ed, and maybe giving an early entry for some that wanted to put a little money to work today.
Yeah, I mean, you could have done that. Obviously, the market is a huge overhang. There's no, it wasn't a day where you really needed to put money to work. But if you wanted to, this was one of the better looking ones, breaking the trend line, rebounding from the 21 and 50-day line. Had shown strong action, consolidated right at the top, basically, of this really deep base. So, if it gapped up here, that people said, I don't know if I want to buy that. The honest truth is, you could have bought at that same kind of price today instead of waiting these few months. So, nice pattern here. You probably want to try to, if you want to buy something like that, you want to try to go early because you just don't know. Early entries have tended to do better in the last year and a half, I'd say.
Yeah, this is still about a 5% weighting in the leaderboard portfolio. I mean, this is a stock that really has the potential, we think, to be a stock market leader. So we'll look to increase the position. Decided not to do it today just because of volume was so light. It did pick up from the prior 2 days of trading, but this is a stock that I could easily see being a 10% position at one point. But we'll see how it plays out. Good action today for Medpace, and then let's take a look at United Rentals. URI is the symbol here. Another stock that is showing strength and support in a tough market right now, just moving sideways, kind of respecting the 350 level. What do you see here?
Well, finding support at the 21-day line. It did break out briefly, but pulled back. But given how the market is, you can see the relative strength line actually picked up since that breakout attempt. Which shows you just how weak the market has been on a weekly basis. It's traded really tightly along this stretch. It's basically finding support at the 10-week line as well. So a lot of strength here. We were seeing a lot of names like Caterpillar, Deere. There's a lot of construction infrastructure plays that are doing well, and you can see that they have pretty strong growth and decent growth, it looks like, for next year. So a lot of reasons to like this name. This is an area of the market that is doing well.
If this market can get going, and if we can, kind of rally and maybe make some progress after, today being the first day of a rally attempt for the indexes, this is the type of technical setup that, that can deliver very powerful moves. But it's not going to deliver a powerful move until, we see growth fund managers and kind of institutional money coming in from the sidelines, and that'll give us also an idea when the market may be ready to start heading higher. So we still need to see more signs of that, but good technical setup for URI. And then finally, Fluor. This is in the heavy construction group. A lot of these, stocks that, look to benefit from increased infrastructure spending. A lot of strong stocks in this group, but Fluor looks to be the leader after a pretty nice breakout and, good price and volume action post-breakout.
Yeah, so a breakout now, it's consolidating above that. It's sort of a shelf, finding support at the 10-week line. Looks like it's 4 weeks into a new flat base. So that's a positive. It's also been on a daily chart. It's been finding support at the 21-day line. So a lot of that technicals is there. One of the things I like about this one is the earnings estimates are strong for next year. These names sometimes have some lumpy earnings, I think, as things come in. But after sort of a flattish year this year, I think there's a lot of infrastructure spending money in the infrastructure bill, and then in some of the newer spending packages. So that should provide a lot of heft for a lot of these names. And that's why a lot of these names are doing well.
Yeah. Good leadership in the heavy construction industry group. All right, well, three more stocks for your watch list. That'll do it for today. Ed and I will be back here tomorrow to end the week on the final trading day of 2022. Ed is going to be in the host chair tomorrow for IBD Live, where we're going to welcome back Charles Harris, a longtime portfolio manager for William O'Neill and Company. He's one of our favorite guests. So we'll look forward to hearing his take on the market. That'll be on IBD Live tomorrow morning, 6:20 a.m. Pacific time. We're going to get underway and go for about an hour and a half or so. If you haven't tried out IBD Live yet, just go to investors.com/IBD Live and you can sign up for a little trial. But a good show on tap for tomorrow. Ed, thanks very much for your insight as usual. Remember, day one of a rally attempt for the market here. The market's going to need to prove itself more. Still has some overhead supply issues to work through, and really looking to see if growth stocks can ramp back up here because today just a lot of beaten down names doing the best. But we'll be back here tomorrow. Thanks very much for watching, and have a great day, everybody.